Thank you all for joining us. My name is Balaram. I'm a chartered accountant and I have an experience of about 20 plus years in audit and consulting. And we are from Spectrum Auditing, which is based out in Dubai. We also have SBC Tax Consulting, which is primarily into transfer pricing and consulting. Under Spectrum Auditing, we do provide all the services like audit, accounting, VAT, corporate taxes, company formation, and related services. So Spectrum is about 10 years old firm here in Dubai. So likewise, we have presence in India, US, and Oman also. So with this background, once again, thank you all for joining us today. And along with me, I have Sai, who is also a chartered accountant who worked with other big four firms earlier. So he is one of the leads of the audit services with Spectrum Auditing. So I'll let him introduce further during the course of the session. So just to set the context, so what is the session that we're going to talk about and what are we going to cover? So the primary objective is to see the how to be ready for handling the audits by the companies. So most of the times when we talk to the clients, some of the important items they only look at when we approach them for audit, and some others over a period of audit only they will realize that these are requirements of the audit. So instead of that, if we are ready as a company with all the requirements of audit and whatever is expected to be able to conduct the audit in a smoother way, then it will be faster and also we will have less issues. Because as you know now we have corporate taxes in place, and for most of the companies, 2024 is the first financial year for which the corporate taxes are applicable. So it is all the most important for us to look at the audit also in a prepared and planned manner so that whatever is required for audit is addressed properly, including the requirements of corporate taxes. So once we finalize the books of accounts and the books of frozen for audit purpose, we also need to look at, by then we need to look at the requirements of corporate taxes and related accounting treatment in the books. So, which means we need to have proper preparation in advance to be able to address the requirements of audits. Right. So considering all these developments in UAE, we thought it is important to cover how to be prepared for audit. So, in the course of our during this session, we will be covering what kind of audits do we have and what are the requirements of audit to be ready to handle that smoothly, and what is the importance of audit and why are we doing it and what are the requirements that we have in UAE. So those things will be covered as part of this, and we'll be looking at like what are the best practices that one should adopt to be able to ready for our audit, and the related requirements will be looked at. We're not going to cover anything specifically from IFRS and anything specifically from international standards on auditing, but we'll be talking on overall basis as to how to be ready for handling the audit in a smoother way. So that's the objective. We'll try to cover the specific standards from IFRS and ISAs over a period, but this will be more about how to be ready to handle the audit as a company. So that's what we're going to cover mostly. So Sai, do you want to get into the next slide
Yes.
once just to cover that? So yeah, this is what we're going to cover as I mentioned. Understanding the audit process, client responsibilities before the audit, common audit requests and how to handle them, best practices for a smooth audit experience, and then of course if you have any questions to be answered, we will be happy to answer them. So this is what we'll be covering. So Sai is going to take over the session from now onwards, and if there's anything, yeah, we'll definitely get into it. So over to you, Sai.
Thank you. Thank you, sir. Good afternoon, everyone. A very warm welcome to the today's webinar. And thanks, Balram sir, for setting the context as to what we will be discussing in the next 1 hour. So the next 1 hour we are going to discuss on the preparation for the audit, both from a both from the auditee and from the auditor's point of view. So we are not going to discuss anything technical related to IFRS or the standards on auditing, but we will be discussing mostly from a preparedness and readiness for the audit. So before we jump into the topic, so this is the brief agenda that we have for today's webinar. So the first aspect is to understand the audit process. We'll understand why is audit important in UAE from a UAE standpoint, and what are the audit involved as part of the audit. We'll try to understand that. And the next aspect is with respect to client responsibilities during the audit. So as part of the audit, what are the responsibilities? What are the expectations that we need to meet for the audit? And the next thing is, what are the common audit requests that generally will come across, and how to handle them, or what to share exactly for those type of audit requests. And lastly, we'll discuss about the best practices or the best practices that we can follow to have a smoother audit experience and to have a quick turnaround both from both the sides. So in order to achieve or meet the deadlines. And lastly, we'll conclude with after taking up with any questions that you might come across during the session. So this is a brief agenda that we have for today's session. When it comes to importance of audit from a UAE standpoint, so one basic thing is that so companies which get their books of accounts audited will have more transparency and credibility when compared to other companies, because so the audit is basically an independent examination and external review of documents by an appropriate competent person, so which increases the credibility and trustworthiness among the users of financial statements. So that is one aspect why people generally take audit. And the next thing is with respect to license renewals. So generally, as part of the authorities with which the company generally register with, so those companies has this concept of for every license renewal, so we have to submit the books of accounts. We have to submit the audit reports. So that is one basic requirement for which we will do like we'll have to undergo audit. And the next is with respect to investor confidence. So the books of accounts audited by an independent party, so it will have more investor confidence than to books of account which is not audited. And also going to the next one on bank facilities, if you are going for any bank loans or any arrangements as such, so banks will generally ask for the audited reports to have comfort on the numbers that we are presenting in the. So that is one criticality aspect. And moving to the next one, which is mandated by the UAE laws. So there are certain authorities. If we register with those authorities, then we have to definitely undergo audit. So like your DMCC, DAFC, ZAFSA, DSO, etc. So if we register with these authorities, then we have to submit the audited financials to those authorities within the prescribed time frames. And also from the corporate tax standpoint, so if revenue of the entity is more than 50 million dirhams, or if that entity is going for a qualified free zone person status, for which we will not have to pay any tax. So for these two cases, from a corporate tax standpoint, so we have to definitely get the books of accounts audited. And for the second case, where a qualifying free zone person, if you want to achieve the if you want to go for the qualifying free zone person status and not pay tax, so irrespective of the turnover, then we have to get our books of accounts audited. So that is one bare minimum requirement that we have. So these are generally the broader aspects as to why we have to get our books of accounts audited. So now that we understood why is audit important, now let's move to the audit process. Yeah, before we move to the audit process, so these are basically the provisions in UAE where it where it describes your books of accounts has to be audited. So one is UAE commercial companies law. So it's so there we have references for who has to get their books of accounts audited, and all. Similarly, we these regional authorities and financial institutions. And with this, we move to the next part, which is understanding the audit process. What are the steps involved? What are the steps involved in the audit? And what are the key roles and responsibilities of both client and auditor? We'll try to understand those aspects. So for a clear understanding, we have bifurcated the audit process into 4 steps. One is the engagement and planning stage, where I can say it's a pre-audit stage. And the second phase is with respect to pre-audit preparation, where what are the things we need to do before we start the audit process. And third phase is basically the audit stage, where all the audit procedures will be performed and what is expected from both the ends. And fourth stage is wherein we are submitting the deliverables and audit report submission stage. We'll try to understand the audit process in these 4 broader stages. Yeah, first is with respect to engagement and planning. So generally, all companies has to appoint auditors by way of board or shareholders resolution. So once the appointment from the board happened, then a formal agreement has to be entered between both the client and the auditor by way of engagement letter, and that will have the details of scope, management responsibilities, auditors responsibilities, and detailed scope and other terms and conditions. So that stands as a contract, I can say. So it has to be signed by both the parties. So this is the pre-engagement stage. So once we complete this stage, then the pre-audit work starts, wherein so in the pre-audit work, so mostly I try to cover all the points from a client's perspective. So so as to throw some light from the client point, what and all things we have to be equipped with, and what all things we have to finalize before sending the data to the auditor. So first thing is with respect to trial balance, wherein so trial balance is one basic requirement that is expected from the client, wherein so before sharing the trial balance, that it is expected that I mean to say your books of accounts has to be finalized in the sense all your reconciliation of all the passing all the month and year end accruals, provisions. So everything has to be finalized, and those has to be incorporated in the trial balance before sharing it with the auditor. So that is one basic requirement, and second requirement is with respect to general ledger dumps. If it's a balance sheet item, so it is expected that all the listings as on date for those balance sheet items has to be ready and finalized. And similarly, if it is a P&L item, so the GL dumps for the year has to be finalized. So the difference is that for balance sheet items, it has to be listing as on year end, but for P&L it is GL dump for the year. So that's the difference I want to highlight here. And next thing is all your third party statements like your bank statement, loan statement, your VAT returns, your WPS statement. So everything has to be sorted and organized in a detailed format. Maybe you can maintain in a folder wise, or you can maintaining all these documents in soft copy is most preferable. And also, if you are maintaining any books, if you are maintaining books in your accounting software like Zoho, Tally, so please make sure you have finalized the numbers. You have finalized those numbers in the accounting software, and you are not going to edit anything after that. So if there are any changes that has to happen, please keep your auditor informed in all cases. Because otherwise those changes the auditor might not aware, and he'll proceed with the figures that you have shared with us, shared with the auditor. So that will create some confusion. So better all your finalization or the year-end adjustments has to be incorporated prior to sharing the trial balance with the auditor. This is the pre-audit preparation requirement. And next is the field work. So as part of the audit, so generally auditor will try to have some conversations with you to understand the detailed business nature of the entity and its operations, to get an idea of the what is that entity into, which industry it falls into, what is the nature of revenue, what are those nature of operations, everything he'll get some idea. So to draft his audit plan. So auditor will hold that discussions to get the brief idea about the business. So once that idea is available, then he'll frame his audit strategies, like what to test and what extent to test, and nature, timing, and extent of the audit procedures he is planning to perform. If he identified key risks and if he wants to perform detailed procedures, then he'll extend his level of testing, maybe by increasing the sample size, maybe by performing more procedures to it. So for all those, the basic understanding of the business is required. So that is first aspect, and as part of it, will auditor will perform substantive procedures. So when I say substantive procedures, he will perform test of details, wherein from the population or from the data shared in each area, auditor will select some samples, and for those samples, auditor will reach out to you for the supporting documents to get an end-to-end comfort on the number. So that is the test of details part. That is one audit procedure that auditor will do in every area, and analytical procedures. Wherever he is able to establish any a relationship with the numbers, let's say with the numbers, let's say your rent. So your rent is expected to be in line with the agreement, right? So if you have a rental agreement and the rental agreement says 1 lakh dirhams per month, so let's say 10,000 dirhams per month. So 10,000 dirhams per month, if you can create that expectation, so that ledger should not have more balance than this expected amount. So those are analytical procedures. So those are the analytical procedures he'll perform, and he'll try to get comfort on those specific areas. So basis all these procedures, he will finalize the report from his end, and the draft will be shared along with the observations identified as part of the audit. And these observations will be shared with the management to get their responses. So based on the management responses, if the auditor believes that the financials are free from material misstatement, then the report will vary accordingly by having a clear opinion or an unqualified opinion, as the case may be. So if he identifies there are some misstatements which are significant, and he considers as material, then he might have to qualify the report. Otherwise, it will be an unqualified or a clear report which is free from material misstatement. So that is the overall process of the audit. So now that we understood the audit process, now let's move to the client responsibilities. Client responsibilities during the audit. Yeah. So first thing is with respect to client responsibility is finalize the books of accounts. When we say finalize books of accounts, so all the year-end adjustments and the everything has to be, the books of accounts has to be finalized. It means, let's take the area of bank. So for bank, we need to so the general ledger has to be matched with the bank statement, and if there are any bank reconciliation statements, so that has to be listed. So similarly for all balance sheets, so we have to do this reconciliation activity, and also make sure we have to ensure the classification is proper for all the accounts, and all the ledgers are closed, and all the accruals, prepayments, and provisions which are generally needs to be passed are passed, and the books of accounts are finalized. And also we have to so we have to maintain all these contracts, invoices, purchase orders, and all these documents. Yeah, I mean, but it is advisable to have all these documents in a soft copy format, so that the audit process will be smooth, and then there will be a quick turnaround to complete the audit as well. And coming to VAT filing, so if you before the audit, let's I mean, clients are available to make sure that all the VAT returns and VAT returns are available with them, and also the VAT reconciliation between the books and returns are done. So that is one thing. And the next is with respect to access part. So it is advisable, like if you can be able to give access to your accounting systems to auditor, it is well and good. Otherwise, but it's an optional requirement. If you are if you want to share the details all from your end, that is also fine. And if you can assign a dedicated SPOC, maybe let's say in larger organizations where the finance team will have multiple people. So instead of dealing with multiple people, if you can dedicate one SPOC who can understand the requirements of the audit, who can communicate back to the finance team and get those audit requirements. If we can have that dedicated SPOC for the audit, so the coordination will be easier throughout the audit. And the next thing is with respect to availability. So be available for all clarifications or walkthroughs to understand the business. So that availability is crucial. And next thing is with respect to accounting framework. So we have to finalize your book. We have to finalize our books of the appropriate accounting framework. So in Dubai, it is IFRS, which is International Financial Reporting Standards. So we are not going deep into it. We'll try to cover those specific standards in the upcoming sessions. Yeah, and also we have to make sure all our personal and business transactions are only business transactions are accounted into our financials, and personal transactions are not accounted or not included in the financials. So that stuff we have to ensure. And also recording all our accruals, provisions for let's say gratuity, provisions for let's say corporate tax, and prepayment. If there are any prepayments, if there are any expenses for which the expense is pertained more than one period, then appropriate adjustment has to be made to reflect the prepayments correctly. So which is by following accrual concept. Yeah, and also communicate any significant events happen during the year. It can be if any significant events happen during the year, like any changes, any major changes happen to the business, any restructurings happen to the business, or else business has entered into some other vertical, which is crucial for the audit. So all those changes, if you can let the auditor know well in advance, so that he can also plan his audit procedures effectively. He can also plan his audit procedures accordingly from the initial stage itself, rather than knowing those things at the end. And also, if there are any legal disputes going on, if there are any legal disputes going on, maybe it can be with the government authorities, or it can be with the stakeholders like your suppliers, customers. So all those ongoing litigations, if you can help the auditor know the details of it, so they will be able to assess whether any provision or any contingent liability or any payable has to be created. So those ongoing litigation details has to be communicated well in advance. And if there are any related party transactions, so it is better to make your auditor aware the group structure of the company, and making the auditor understand what are the list of related party transactions that the company has entered into, and if there is any requirement to perform benchmarking. So then that benchmarking exercise should also be done to make sure that we will not have any disallowability during the corporate tax liability when we are trying to arrive at the corporate tax liability. So we will not have any disallowances during that stage. And if there are any significant events like loans taken or any major leases entered into or any capital additional capital contributions that the shareholders has injected to the company, so it is better to make your auditor know well in advance to understand if those requires any special treatment in the books of accounts. Yeah, so those are the broader client responsibilities that we have during the audit. So now so basically in this particular stage, I mean for this we'll try to understand what are the audit requests, what are the audit requests that clients will generally come across. We'll try to break down into area wise, and we'll see what is expected out of those, what is expected out of those areas, and how to deal with those requests. We'll try to see that. Yeah. So generally on when we initially start the audit, so trial balance. So when we say the auditor will generally need the trial balance to understand the entity to some extent. So for that, the initial requirement is trial balance. So this trial balance. So if you are maintaining any accounting software also, so from that you can uh, you can download and share it easily. And also make sure your general ledgers and your general ledgers are finalized, and you have, if there are any reconciliations to be performed, you have performed well in advance before sharing the trial balance with the auditor. And if you are maintaining any chart of accounts for classification purposes, so those chart of accounts, if you can share it with if you can share, so we'll have a better idea about each of the ledgers to plan the audit accordingly. And for cash and bank area, and for cash and bank as an area, so the general requirements is that the first and foremost requirement is the bank statement. And if there are any differences between your bank ledger and the bank statement because of the bank reconciliation items, so we need to prepare that bank reconciliation BRS and then share it with the auditor. And also the next requirement is confirmations. So this confirmation, yeah, and also the next requirement is confirmations for all banks, irrespective of the materiality. We have to get the confirmations from the banks directly. So it should be direct confirmation from the bank to the auditors. So so you have to authorize your bankers to share direct confirmations to share direct confirmations to auditors. So as part of the audit procedure. And coming to revenue as an area, so basically the the basic requirement is that sales register for the year has to be finalized, and that should match with your trial balance. Before sharing that. So we just need to ensure your our sales register is matching to our trial balance ledger or not. So we have to ensure that and then share it with the audit team. And coming to next one, so all your sales documents, supportings like your contracts entered with your customers and invoices, sale invoices, and if there are any delivery notes or any confirmations for the services have been performed already. So all those communications and contracts, everything has to be kept ready and shared with the auditor. So similarly for purchases and expenses, so the general requirement is that purchase register and transaction term which matches to trial balance again. So that check we have to perform before sharing it with auditors. So after sharing it with auditors, we should also make sure that all our invoices, contracts, and delivery notes are readily available, and you can share as and when auditor comes up with any samples. asking you to share the supporting. And coming to fixed assets, are trade payables, are trade receivables for that matter. So if we maintain any fixed asset register which matches to our ledgers again. So and along so that is the bare minimum requirement. And the depreciation workings, if we are maintaining depreciation workings manually, so those depreciation workings should also be finalized before sharing it with the audit team. And next thing is with respect to payroll. So for payroll, the basic requirement is that uh, the 12 months pay register, the WPS records filed with the authorities, and and the employment contracts as per more. So these are the things which we have to keep ready for the auditing. And uh, so once we share the salary registers, if they come across, if they comes back with any samples asking for the employment contracts and all, so you can share those employment contracts accordingly. And also before sharing the salary registers, if we can reconcile those salary registers to the general ledgers and then share, it would be helpful. So to have a quick turnaround and to meet the timeline. And coming to the legal and compliance part, uh, under this area, so basically all the KYC documents and all the company incorporation documents, like your trade license of the company, MOA, AOA of the AOA if maintained, MOA of the company, and all your shareholders passports, Emirates IDs, and then agreements or any litigation tracker if you maintain. So those details, if you can share it with the audit team, uh, if you can keep ready, so that is the expectation under this area. And coming to VAT, so basically VAT. So under VAT, the requirements are that if you can maintain VAT returns and VAT reconciliation between your books and your VAT returns. So if you can maintain that reconciliation, so that is expected from this area. And for cases where this inventory is not applicable for all companies, for cases wherever inventory is there, let's say it's a trading company, let's say it's a manufacturing company, it is expected that they will maintain inventory. If it's service sector and all, they may not have inventory, but for trading and manufacturing, it is expected that they will have inventory. For if the inventory is applicable for those entities, so we have to maintain a listing, quantitative listing, which will have both quantity and amount details. So again, which matches back to your trial balance. So that stock report has to be maintained. And along with that, if management performs any physical verification, or in case of manufacturing industries, if they can have a valuation report for the inventory balance as of the year end, so that should be maintained. And along with that, the supporting documents for those inventories, like your invoices, delivery notes, has to be maintained. And coming to next area on related parties. So for related parties, the basic requirement is that if we can have the group structure clearly explaining the relation between the entities in the group, and also if we can maintain the list of related party transactions and the related party balances, so that would be helpful for the auditor to disclose those related party transactions in line with IAS 24 requirement. And also going to the next thing, which is on adjustments and provisions. So for these adjustments and provisions, let's say if the DTA and DTL may not be known to everyone, but if that auditor will take care. But for cases like gratuity and corporate tax, if there is any gratuity workings maintained, so those provision workings has to be shared along with the numbers. So those if you anyways, it is expected that you will, for provision for gratuity, you will maintain employee level working. So those workings has to be is expected from this area. And yeah, and moving on to the next thing, which is the best practices to have a smooth audit experience. In order to have a smooth audit experience and in order to have a quick turnaround and to avoid any to and fro or back and forth between auditors and the client, and to achieve a quick turnaround and to meet the deadlines on time. So if we can follow some best practices during the audit, which will help us avoid all those to and fro's, and thereby we can achieve the timelines or meet the timelines and submit the reports well in advance. So for these cases, maybe one best practice that one best practice is that if we can have one single point of contact, maybe if it is a finance, if the finance team is big, let's say if we are having a finance team of, let's say, 5 and more people. So in those cases, if auditor can deal with one specific contact, and that contact so that if that person is well equipped enough to understand the auditor requirements, and if we can pass on that information to within his team to get the information, so that will ensure, that will speed up the process, that will speed up the process of the audit. And second thing is finalize your books of accounts. So if you can finalize your books of accounts, like uh, so as we discussed earlier, so if you can match your trial, if you can finalize your books of account, making sure all reconciliations are happened, all your year-end adjustments are taken place. So before sharing it with the audit team, so that will again avoid the to and fro, and we can take the finalized TP itself, and we can proceed with the audit. If there are cases where there are adjustments passed after the audit, so those audit adjustments, if we can let auditor know well in advance, and as and when you come across those audit adjustments, so if you can pass on that information to the audit team well in advance, they can incorporate those audit adjustments along with the trial balance, and they can plan audit procedures on those entries also. So if these points are these points are, if the auditor get to know at the last minute, and if he has not done any audit procedures, then it will become an issue, and that will delay the audit, and that will delay the issuance of the report also. And also if we can understand the audit timelines, like for example, if the entity is registered with ZAFSA, if the entity is registered with DAFC, if the entity is registered with the DMCC, so if we know with whom we register, and if we know what is the deadline for those deadline for those authorities to submit the audit reports, then we can plan the audit in advance. As everybody, as we all know, that generally audit will take about 2 to 4 weeks. So if we can plan things in advance, so uh, we can achieve the deadlines, and we can submit the reports well in advance. And the next thing is with respect to sorting or organizing the files. So if we can share, like when we are sharing the data to the auditors, if we can have all those data in a shared folder, if we can maintain a shared folder or a OneDrive folder kind of. So, and if we keep adding the document to OneDrive folder, and by maintaining folder wise data for each of the areas, so that will make uh, that will make clarity to both the sides as to what exactly you are sharing. And uh, if you can keep letting know the auditors as and when you are adding some information to those OneDrive folders, so uh, that will help the audit team to access those documents in an organized way. So that will help the overall audit process also to that will speed up the overall audit process. Yeah, that will speed up the overall audit process. Yeah, we try to cover up the audit process and the basic responsibilities and how to deal with the specific requirements and the best practices. So if we have any questions, we can catch up on those. We can catch up on those questions. Thanks everyone for joining, and thank you Balram sir and Raghu sir for organizing this session.